from delay to decision. The regional office confirmed that the proposal had been reviewed ahead of schedule, despite concerns raised by several department heads. As demand for digital services continued to increase, the company decided to expand its operations into 3 additional markets. The finance team recommended allocating the budget more cautiously rather than approving all requests at once. Although the initial forecast appeared optimistic, revised data suggested that long-term growth would remain stable. The project manager requested that all reports be submitted by Friday, provided that the revised timeline was approved. During the meeting, the consultant pointed out several issues related to staffing, particularly in branches responsible for customer support. The board agreed to postpone the launch, thereby allowing more time for system testing and employee training. A detailed explanation of why the delay had occurred was shared with stakeholders to maintain transparency. Despite the apparent short-term benefits, the proposal was ultimately rejected due to potential regulatory risks. The supplier confirmed that the shipment would arrive prior to the end of the fiscal quarter. As the discussion progressed, participants focused on improving efficiency through process automation. The director emphasized the importance of retaining skilled employees in order to sustain productivity. The policy was revised to ensure that compliance requirements were met without increasing operational costs. While several alternatives were considered, the team selected the option that minimized long-term liabilities. The revised plan was distributed to all departments concerned with implementation. Following the announcement, employees were informed of changes affecting their roles and responsibilities. The company aimed to reduce expenses by outsourcing non-essential services. After reviewing the feedback, management decided to proceed with the restructuring plan. The contract was signed once all legal conditions had been satisfied. As a result, the organization was able to improve overall performance within a limited time frame. The marketing division reported that customer engagement had increased significantly. Rather than relying solely on traditional advertising, the firm invested in data-driven campaigns. The analyst explained how recent trends influence consumer behavior across regions. Despite limited resources, the team managed to complete the assignment successfully. The training session was scheduled in advance to ensure maximum attendance. When unexpected issues arose, the support staff responded promptly. The revised guidelines were distributed so that employees could adapt quickly. As market conditions changed, the company adjusted its strategy accordingly. The supervisor reminded staff members to comply with updated safety regulations. The system upgrade was completed without disrupting daily operations. The executive committee reviewed the performance metrics carefully. Although some targets were not met, overall progress was considered satisfactory. The proposal was modified in response to feedback from external advisors. The firm continued to invest in innovation to remain competitive. By the end of the quarter, revenue had increased beyond expectations. To address customer concerns, additional resources were allocated to support teams. The manager confirmed that all deadlines would be met as planned. Despite initial resistance, employees gradually adapted to the new procedures. The audit revealed areas requiring immediate improvement. As a precaution, the policy was updated to prevent future issues. The company announced that further expansion would be considered next year. Rather than making hasty decisions, executives agreed to evaluate market data thoroughly. The final report summarized key findings and recommendations. Although challenges remained, the outlook for the coming year appeared positive. Ultimately, the organization demonstrated its ability to respond effectively to change.